If you're a green card holder thinking about leaving the United States, there is a very real risk that IRS could impose you a US exit tax, even if you never thought you are a wealthy individual. And here is a scary part. Many people become subject to the US exit tax by accident, simply because they planned too late. In this video, I'm going to explain how green card holders can legally avoid the US exit tax, what mistakes I see all the time, and why timing matters more than many people realize. This video is for educational purpose only and not tax and legal advice. But if this topic applies to you, you'll want to pay close attention. So why listen to CHI Border? We are a US international tax attorney, and myself is a former CPA, 30 plus years of experience dealing with cross-border matters. And we specialize in the followings: advise green card holders exiting the US, focus on US exit tax, international tax reporting forms in preparation and consultation, and final year of tax compliance consultation and preparation. So this is not a general theory for us. This is what we do every day. The very first and most overlooked step is avoiding long-term resident. Avoid becoming a long-term resident, LTR. If you held a green card for 8 out of last 15 years, the IRS treats you simply to a US citizen or people who lived here forever for the US exit tax. And here is a danger zone. I call a danger zone year 6 and year 7 because IRS tax year in this case is a partial year also counts. So many people think that, hey, I have one more year to go. I'm been here only 7 years. Well, if you count the partial year, you may be already in the 8th year. So that is something that you must pay attention to. Now, even if you are long-term resident, you are only subject to the exit tax if you become R covered expatriate. Therefore, the next solution is do not become a covered expatriate even if you are a long-term resident. And there are 3 separate tests, and failing any one of them can trigger exit tax exposure. So let's take a look at those 3 tests. The first is a net worth test. If your worldwide asset exceeds $2 million at the time when you give up your green card, you fail this test. So this is like a snapshot test. Second is tax liability test. If your average US income tax liability was too high, you fail this test, even if your net asset is under $2 million. And the third, and this is most underestimated and dangerous test, and people get caught by this with supplies, is a compliance test. If you missed filings, or in other words, if you do not declare that you have complied with the federal income tax rules for the prior 5 years, you become a covered expatriate, even though you do not have assets exceeding $2 million, or if your tax liability average tax liability did not exceed the IRS threshold, you still become a covered expatriate. So these filings include obviously FBAR, FATCA, and PFIC, CFC, foreign gifts, foreign trusts, and so on. So planning matters because you only need to fail one test to become a covered expatriate. Okay, well, still, there are people who meet number one, the net worth test. What can you do about it? So, there are three items that triggers exit tax. First one is your unrealized gain. The exit tax is essentially a deemed sale of your worldwide assets. When there is annual exclusion here, you can see for 2026, the annual exclusion is $210,000. But this can be very simple to achieve this number if you hold appreciated investment stocks and stock-based compensation. So that's the number one way for you to get taxed. Number two, I'm not saying these assets are bad, but these assets require special attention, such as 401k and other retirement account for 53, 47, traditional IRA, HSA, health saving account, Section 529, RSU, restricted stock units, and other deferred compensation items. They need special planning. Okay. The third is becoming a beneficiary of a non-grantor trust can create serious exit tax exposure. So even if you are long-term resident and even if you are a covered expatriate, if you can avoid all these three, then you will not get penalized by the US exit tax. So, if you're a green card holder or if you're advising green card holder and you're thinking about leaving the United States, this is exactly the stage where professional service matters. At CHI Border, we focus on providing planning before mistakes become irreversible. If you'd like to discuss your situation, we offer online consultation. And the link is in the description below and our website. And if this video was helpful, please like and subscribe and share it with someone who may need it. Thank you very much. My name is Ko Fujimoto. Have a great day. Take care. Bye.